Thanks, everybody, for coming over here today. My name is Pavel. We've got a really good panel talking about smart contracts and insurance. We've got the legal side represented. We've got global strategy also represented, talking about the whole industry and what everybody's doing. And then right now we have one insurance company, but Zia is also showing up, so we'll have two actual insurers talking about this. So before we get started, why don't you guys just give a quick, 1 minute introduction of yourselves, starting with Brian.
Hi, so I'm Brian Harley. I'm a registered foreign lawyer with Clifford in Hong Kong. That title just means I qualified elsewhere, but I'm now based in Hong Kong. I do a lot of work in the tech sector, and I'm especially kind of passionate and deeply interested in smart contracts, how you turn contracts into something that looks like machine code. And I'm sure we'll get back to that in our discussion.
David?
Hi, my name is Dave Treat. I co-lead Accenture's blockchain business globally. I have a partner named Simon Whitehouse. The two of us have been building this business for the past 3+ years. I've been involved in the blockchain space for over 6 years now. I sit on the board of the Linux Hyperledger project. I also sit on the board of the Enterprise Ethereum Alliance and a few other of the industry associations.
Great. My name is Frank Desvignes. I'm working at AXA, which is one of the largest insurance company. I'm running actually the innovation labs that we have across the globe, from Silicon Valley to Shanghai. My job basically with my teams is to meet with 500 entrepreneurs and tech players per year to select the 10 to 20 ones with which we want to do a strategic partnership.
All right. So before we really get deep into smart contracts, and let's just assume not everybody knows fully what a smart contract is in blockchain, would one of you guys want to take the lead and just kind of describe what a smart contract is in the perspective of an insurer?
Yeah, I go first. Okay. So basically, a smart contract is a line of code where we can put some rules and try to find an automated way to execute it. So basically, yeah, it's line of code.
David, want to add to it?
I can't see how
David,
many.
could you hold it up a bit more?
Oh, sorry. How many technologists in the room? And show of hands? All right. Smart contracts, there's another view of it which just says this is the age-old debate of stored procedures, co-locating business logic and data. And it's really no different than that. It's just the latest permutation of stored procedures. I got one head nod. All right.
So I'll have a crack just briefly. We've called them smart contracts, and Frank said it's a line of code, and I think that's a good way of setting the debate, right? It's a line of code first and foremost. It's called a contract, but not entirely clear whether or not it's a legal contract.
So saying it's just a line of code is a little bit of it. So why is this line of code really special to the insurance industry? Why is everybody really excited globally about what smart contracts can do for the insurance industry?
Yeah, the excitement is about if you're going to co-locate the business logic with the data, and you're going to have this ability to have that business logic automatically execute. What you're then doing is stripping away, hopefully, a whole set of messages back and forth between participants, the operational headaches, the data quality issues. You have the potential for an incredibly efficient ability to execute business logic because it is co-located with the data.
So to push that further, how does this benefit a consumer? Why should they care? What's the end result? Because there's got to be something in for the consumer that the insurer benefits from.
Personally, my view is when done right, end consumers will never know that it's blockchain. They will never know that smart contracts are being applied. You will just see, a new degree of efficiency in when you engage with businesses that are applying it. So I think it'll be invisible to end users. I think blockchain at the end of the day is about the systems of record. It's not about the systems of engagement. It's not a new user interface. It's frustrating to some degree from that perspective, because it would be fantastic for all of us to be able to look at something and say, that's blockchain. You always, when you do a demo of blockchain, in effect, you're always showing the user interface and then explaining what the data structure is and the business logic is behind the scenes. So, it's going to be invisible when done right.
So I guess we'll just say it'll make life easier and a better user experience.
Yeah, from an insurer perspective, I think it could bring trust in execution. So, there is might be some conflict of interest in the insurance business and misalignment with the client needs, and asking a third parties to execute something to trigger the payments, the compensation, or something like this, is a business logic that align the consumers with the insurance company. So that's where that's an area where blockchain could be very useful.
Go ahead.
Just taking the legal perspective, because you often get asked, are these legal contracts? And it's kind of emerging from what you're saying, it maybe doesn't really matter, right? At the front end, if you're the customer, maybe you don't know that the smart contract is involved, maybe you don't know that the blockchain is involved, and maybe you don't really care too much if you have a binding contract. What kind of matters more, and sorry to be the lawyer who points out, what if it goes wrong, right? What happens if it goes wrong? How do those contracts, those kind of substitutes for a legal contract, how does it pan out if something goes wrong and you have to find somebody accountable?
Yeah, and I think that's the key point in all of this is making sure, unless you're caring for what happens when it goes wrong, you're just playing with happy path, fun experiments. And I think that triggering on what you just said, I think in a corporate and enterprise construct where you're applying this in a real world scenario, it is never absent the business agreements by which either two businesses or a business and a consumer are bound to work together. The application of this automated code that co-locates with the data is just the next way that automation is manifesting itself. But when done appropriately, it's within the current constructs or evolved constructs of the legal agreements between two parties. It doesn't replace them.
So, Brian, and then we've got an insurer here. So would you say that this will make disputes easier to resolve between, let's say, the claimant and the insurance company?
That's a really good question. You've called them contracts, and we're not really sure whether legal contracts or not. And the way David describes them, they could just be functionality in the back end that you never need to be aware of. The thing is, if they work really well, hopefully they do to an extent replace legal contracts, right? Or at least they simplify the way you transact. Because if you're going to use a blockchain, it's going to involve multiple parties. So it is a bunch of people getting together, agreeing to do stuff, to transact, to update ledgers, and so on. So what happens if it breaks down? And the interesting thing about a smart contract is, unlike a contract that you can take to court, I can talk to my lawyer, and my lawyer will send you a strongly worded letter you may or may not respond to. With a smart contract, you have to build in the functionality to be able to have a dispute, right? If you're talking about old school blockchain, let's call it that, like Bitcoin, you can't change the contract once it started execution. Either it executes or it fails, but nobody can stop it. In order to enable smart contracts to be resolved in that sense, you'd have to build into the smart contract functionality that says, hey, wait a minute, we got a problem. Let's say, I have to click a button somewhere on my user interface that says, pause. We're going to have to refer this to maybe a third party that steps in and says, we stop the contract, we start it again, or we adjust it. But that has to be built.
So do you, I guess, both you guys, do we foresee a problem? Because if smart contracts are all binary, ones or zeros, how do we account for this gray area that you guys on your daily lives deal with all insurance products?
So maybe I can point one of the product that we've launched on the blockchain with the smart contract. And actually what we do is, as we do not consider the smart contract as a binding contract, what we have done is we have attached the documentation to Isaiah. You're doing good. We have a flight delay cover that we've done on a smart contract that I can.
So we're just getting into about to get into applications. He's talking about a flight insurance, and we're wondering, you might have needed to buy that, huh?
Sure. So we looked at ether risk and Fizzy, and we loved it. In fact, we said, well, what else could we do? And we built something around health insurance called Vitana. And maybe later on, Pavel, I'll tell you guys a little bit more about that. But health insurance is the application or use case of smart contract that has gotten a few people excited.
So maybe just allow me to
go ahead.
So I was saying that actually we were debating about a smart contract being a binding contract or not. So for Fizzy, what we do is we attach to the smart contract, we attach a documentation, which is an insurance policy actually. So wording are quite still different than just coding.
Yeah, and I guess just taking a similar approach to it is, I think when you wrap the entirety of the transformation and the application of shared data infrastructure to a business dynamic, you have that context of the legal agreements by which two parties are going to work together. You have this notion of some degree of automatically executing business logic, and I think if you add the third dimension of the natural audit trail, tamper evidence, nature and provenance of the data involved in the business transaction, I think we have a vastly better, mechanism going forward. Because I'm just widening it from what you said, right? If and when you get into that dispute with a counterparty, right, you pull the contract, right? Step one, but then there's discovery of how do you go find the data that's related. Now suddenly that's all baked in, right? The discovery process becomes vastly easier in a dispute because it's implicitly captured in the transaction by the platform itself. So, I think it's too narrow to just parse the legality of the smart contract itself. I think if you have to take a holistic view of the entire platform. And I'm using that in a very widest possible definition: the business policies, governance, standards, processes, rules, operating model, automatically executing code, and legal agreements all together. And I think it's vastly better than what we've been living through.
All right. So I got into the blockchain space a couple years ago, moved to Singapore. Mainly we're working with banks, and then actually met Zia and Frank just over 2 years ago. And what I found that was interesting was they kind of opened my eyes to like the insurance industry. And at that point, payments on blockchain I felt was going to take too long. Banks aren't going to do it. And I forgot that actually probably the most exciting use, and trade finance people talk about, but that takes a lot of effort. One of the most exciting use cases I saw, once understood from these guys, was actually insurance, because there was, like David said, a lot of automation, a lot of pain points that can be solved, and you're not reliant on changing bank payment systems and having everybody buy in on that side. You can actually work on specific product use cases. So that got me really excited about this entire sector of blockchain and got fascinated by it. So now that we're like kind of 2 years out from that, starting from the end, Zia, how about some of the applications that you guys, I know you guys are always experimenting at LumenLab with even those crazy ideas. Like, what are some of the stuff that you're seeing to come to fruition or that you guys want to push ahead?
Yeah, so the last year and a half have been amazing, right? And there's so much advance in this space. And so many times people have come to me, and I don't know about you, Frank, and said, that's not really insurance, what you're doing. And I said, okay, that's fine. I'm totally okay with that. And what I want the audience to start to think about is stop thinking that we're going to try to basically fix the existing insurance business. Because what we're really doing is we're opening up new risk pools and saying, hey, there's a better way. There's a simpler way, using automated contracts and using consensus mechanisms to cover things that aren't existing covered right now. So I'll give a couple of examples that are kind of exciting that I've thrown out on stage. So parametric insurance applied to divorce, for example. What if fathers of the bride were able to get insurance that their daughter or son doesn't get divorced? You produce a divorce decree, automatically you get a payment for 100,000 Sing dollars back. Anything that is a trigger, TOEFL exam, the bar exam, it's anything that's a mulligan, if you will, to use the golf term, you could parameterize and say, in case you're not protected, here's a contract that says if this happens, then you can get such and such payout. And it ceases to be really insurance per se. It's a risk product. It's kind of more like a warranty.
So then, but why is a smart contract enabling that where, let's say 5 years ago, 10 years ago, you couldn't have offered that?
I mean, for the same reasons we just mentioned. Just all the data is right there. The fact that the trigger is something that 99.99% of the consumers will believe in, right? So okay. Ian has, if it's raining and you're a commuter in China, they'll pay you. And that's automated. I like the ideas around food safety and inclusion for women's health issues, such as baby formula. Mm-hmm. So if there's ever a recall, we could basically let that be part of the contract to say you get some amount of money or value back. So when you have a if that is clear and understood and a then that you can all agree upon, it's not really insurance in the traditional way, but it is a risk product that we could then roll out easily, cheaply, for a whole variety of risk pools.
So then the consumer in that situation, that woman, female, sorry, she doesn't have to, collect the paper, make photocopies, send it. It's like, hey, we already delivered this insurance, almost like this warranty. She's on here. We're paying it out. It automatically just kind of deposits into her account. Very neat.
Yeah.
Yeah, so I agree on the fact that this type of technology should help us to insure things or people that were risk that were not covered by the past, or people that are underserved. So it's true that we started with this idea of flight delay, which is not a risk that was not covered by the past. But let me be transparent on how we've been through this process of 9 months to get internal approval, et cetera, on this product. Actually, so you have to know that flight delay is an option that you all have in your existing travel insurance product. So in that specific case, we were trying to disrupt something that was existing, right? And the fact is, if you compensate people, 100% of the people that are concerned by this flight delay, you will make this product much more expensive than it is today. And you know why? Because we turned the business model of the initial traditional insurance, which is we make some margin when people does not claims, right? So that means that if we do consider that a line of code will execute automatically the compensation of 100% of the people concerned, the product, the risk itself, will be more costly, right? So in that manner, actually, we turn the initial business model of insurance with something new. So that's what we wanted to do. And then second thing that I can share is the fact that we could have done this product without blockchain, right? So it was almost 2 years ago. We took 9 months to develop it, and we are happy to have gone through this experience on working on blockchain. We've built our own experience curve on it, and now we are ready to launch new type of product. So the next generation of product that we are currently working on are actually parametric products based on an index with the third-party data providers that could help us to trigger. So it could be satellite images to insure farmers in the Philippines against typhoon. It could be for crop insurance, where we could, with NASA satellite images, we can assess the damage automatically without asking any information on the ground, without sending people to distribute the offer, and without sending real people to assess the damages. So what we believe today is reducing those costs of operations and distribution. We can underwrite pure risk with a fully automated system that will compensate people automatically. So this is an area where we go, definitely, and we are currently looking at opportunities on that side.
So with those last examples, it's almost not just a better customer experience. You're actually opening it up to a whole group that probably wasn't looking at protection, couldn't afford it, but because of the technologies and the systemized improvement in the back end, they've got opportunities now to buy.
Yeah, thanks to the cheap cost of the technology, we can insure people that were not insured by the past. So it's about 2 to 3 billion of population. And again, with a completely renewed customer experience.
So, Brian, on anything they need to be aware of when they're offering these new types of insurance on a legal regulatory side?
Yeah, I'll try not to be the kind of finger-wagging lawyer here, pointing out all the risks and saying things like, it's not because you can do it with a blockchain that you should do it and you're subject to the same rules. One of the risks I think is quite interesting here that really goes to the heart of it being, a blockchain-based concept is as soon as you do things like Frank just mentioned, where you get outputs from the real world, right, satellite images, and you kind of compute that to try and see what the state is on the ground. Razia, I think I saw the LumenLab is something where you have a doctor kind of examine a pregnant lady and decide whether she has gestational diabetes, and just clicks a field somewhere that says yes or no, and that's then a trigger that feeds into an automated smart contract. In the lingo, I'm sure you're all familiar with, that's an oracle, right? A third-party input into an automated process. And I don't think you can do meaningful smart contracts without oracles, especially in insurance, right? You're always going to need a kind of trigger event and a way of feeding that trigger into the contract. But the interesting one from a legal perspective is you went from this automated system that is meant to reap all the benefits of a blockchain where everything is certain and tamper-proof and everybody agrees, we all have the same set of facts on a blockchain, to a system where now you've introduced this point of failure, and hopefully it's a very reliable point of failure, but maybe the doctor got it wrong, right? Or maybe there is some kind of glitch in the satellites, and that thing you've just written to your blockchain and has yielded automated results is something that's problematic legally, and where your dispute resolution mechanism I was talking about earlier might need to be invoked.
Well, the same happens in regular insurance. We take the coroner or the advice of somebody who says this person's actually passed away, or that this person has a critical illness. I mean, think of it this way. I was thinking about this philosophically when the first time a lawyer mentioned this to me, so obviously this isn't the first time. It is, we live in an analog world. Our blood, our blood glucose level, our mortality, we are all analog beings. At some point, there's an ADD translation, an analog to digital translation that occurs. And there's a single point of failure every time we go from what's really happening in the world to how do we encode it in data. And that moment isn't going away because of blockchain or because of an API or whatever it might be. There's always that element of, did 2 people or 3 clinicians look and make sure that they read the result right? Maybe one day the ADD converter will be so automatic that immediately after you take the test, it will be logged into some sort of database. But we inherently have this logic of, if we want to ensure analog world risks, we're going to need to, at some point, be pretty sure that the ADD converter works in some sort of manner that we can all agree upon. But I think it may be time, Pavel, since it's been mentioned, to give the journey, because it's kind of exciting, and Christine Lagarde mentioned it in the IMF meetings the other day in Bali, because it is about inclusion. It's quite interesting. Week 5, you walk into your doctor's office, you find out that you're pregnant, it's your first time perhaps, you're excited, but the doctor says, you need to be worried about gestational diabetes. If you're a woman in the room, 1 in 5 of you could get gestational diabetes in any particular pregnancy, despite whether you're healthy or not. It's a lifestyle. It's not just a lifestyle issue. It's just somewhat randomness. So what we've offered is the bundle of the oral glucose tolerance test with insurance at that moment in week 5. She takes goes into the app, answers 3 or 4 questions, and immediately gets insured and gets a smart contract written in about 2 minutes' time.
Wow.
And all that happens, and payment is taken for about $79 Sing right there in week 5. But the magic happens obviously afterwards. In week 25, you go back into the test. You have the oral glucose tolerance test. The clinicians, with plural S, then write onto the blockchain either a 0 or a 1. If it's a 0, nothing happens. If it's a 1, then the contract executes. We know the OCBC or DBS bank account number. The payout automatically occurs. There's no claim moment. There's no claim.
So that went full cycle right there. With one sign up in 2 minutes.
Exactly. So as Frank said, it just more than decimates the costs associated with handling the trigger of the oracle turning into a contract. And the metaphor that I heard 2 years ago was a Coke vending machine. If you put a piece of metal into a vending machine out there that's the size, weight, and dimension of a $1 Singapore coin, the smart contract will then execute and give you a 2 degrees Celsius Coke Zero. We want to create new insurance products that are as simple as a Coke vending machine. And the reason is trust. Because we all trust the vending machine. Well, at least we do now. When I was a kid, I used to kick it. But we trust that when there's a trigger that everyone can agree upon, whether it's crop insurance, you're lucky at AXA, you get to do all kinds of fun things outside of just life and health. But if we agree on a trigger as a customer, and we agree that the mechanism is fair, then more people will buy insurance because they don't have to deal with the uncertainty and biases that we humans have.
Well, I guess whenever especially the millennials, when they talk to them, is like, what do you think of insurance? And the main thing is, I don't trust it, I don't know where my money is going, and I don't know what's happening in the back end. And if people are making false claims, I'm paying for that. And it's not fair to anybody. And so what you're saying, these things can almost eliminate all those barriers and risks and bring more people in. David, with you guys, what other... that's an awesome.
I want to react a little bit to this. And, I'm a capital markets guy, right? I grew up in, I've taken on this role of global blockchain lead, and I've had a blast now learning other industries, not just FS. I presented at a semiconductor industry conference last week. I'm having a blast. I'm incredibly impressed by the insurance industry is not making the mistake that we made in capital markets, right? In capital markets,
which are?
Sorry. Many. But in capital markets, and I'm complicit in this, when we went digital, right, we dematerialized. We went from paper stock certificates, and we went from the paper world to the digital world. We just digitized the analog process. We, in effect, made electronified the wheelbarrowing of paper tickets from the stock exchange to the clearinghouse. We just made it electronic, and now suddenly with this technology, we're getting creative around really retransforming it. You guys aren't making that mistake, right? The insurance industry, I'm incredibly impressed, is avoiding that error of let's take this technology and let's simply digitize the analog process. The creativity around, as you say, new risk pools and all of, I would wear that as a badge of honor that you're getting, people are pointing at your work and saying that's not insurance. I think that's awesome. So we're incredibly proud of I'm anticipating the question I think you're going to ask. We're incredibly proud of work that we're doing in North America right now. So the Risk Institutes, it was the Industry Association in North America, the educational body, the regulatory lobbying body, the standard setting body. They formed 2 years ago the Risk Block Alliance. So it was 30. Now it's more than 30 of the biggest insurance companies in North America got together and said, let's embrace this technology. We see real value, and they've similarly done it right. They didn't start with the tech. They didn't start with let's build something and then figure out how to use it. They started with value cases and use cases, and we're building the technical infrastructure for it now. But in terms of examples of things that are happening, I'm not nearly as exciting. I'm really impressed by the examples you guys just gave, but we're starting with some of the basics, right? So the consortium represents close to 60% of all auto-related premiums in North America, right? So they own, the group owns the lion's share of the market. So focused first on proof of insurance and first notice of loss, right? So the two of us get into a car accident, we then have to it's now your insurance company, my insurance company, your information, my information, a third party that's going to fix, two third parties that might fix the cars, all embroiled today in a massive data exchange and messaging and reconciliation and confirms, and the ability to put that into a shared data construct has serious value. And so, starting with some of the basics, where there's known big value. But then we're getting into really creative conversations similar to what you're describing of, conversations like if you look at the shipping industry, right? Supply chain is a huge dynamic for blockchain, and the notion of 90% of the world's goods move on a ship, and what better place to talk about that than Singapore? So the premium, the risk. The risk premium that's set for a shipping container is done. The calculation is made before it leaves, its point of origin. 85% of the time, the ship does not take the path that was originally laid out that yielded the risk premium, right? And so, because of lack of transparency, lack of access to data, lack of just the arduous nature of messaging to be able to actually track the data, the whole notion of dynamic insurance driving behavioral decisions because the premium may change along the way based on the path that the ship's captain takes, I think extending that to other areas of our lives, that whole notion of because you have shared access to data, because you have that auditability, the transparency, to be able to drive the dynamism of insurance products, to be able to reshape decisions. Obviously, all the data that's coming off of our wearables and health decisions, it's incredibly fascinating to me if more and more based on creative tech, if my personal life choices could guide me in a healthier direction, which is in everyone's best interest. That's kind of cool. So anyway, I'll end with where I started. I'm just incredibly impressed by the insurance industry's avoidance of that, just digitizing the analog process and the creativity that's being applied.
So maybe let's stay humble. We've tried to transform our existing process into digital process. I think at some point we failed, and notably because of the weight of the physical distribution network in the traditional insurance business. And also that's maybe a privilege of starting the digital journey with 10 years later than the banks, for instance. We've missed the initial trains, but the privilege is that we finally enter into the new one. So what I believe is at AXA, we should not miss the train of blockchain. So definitely, if we have missed the previous ones, this one we are trying to take it differently. But when we say that blockchain is bringing trust to the different connection that we have with customers, etc., it is true, and actually it is not true as well. So blockchain is trustable as an infrastructure, but still there are still a lot of things to be done and to be fixed to make it clear for people. I don't know if you talk about smart contract with your family, but they might do not get what kind of job you are doing today. So I think today we only have 30 million of wallets, crypto wallet, right? And we've been excited to look at this 200 billion market cap in 30 million wallets. We've been trying to work on insuring digital assets.
Well, to make that number even bigger, that 30 million crypto wallets is probably on average each user has maybe 2 or 3. So it's only really like 10 million users.
Yeah, absolutely.
So the market is actually way bigger potential.
So we are far away from the massification of blockchain, the adoption of blockchain wallet and so on by the population, and notably the one that we are targeting with this technology, right? So we have huge challenges in front of us, and notably to try to massify the adoption of the technology. So you're right, the technology will serve a new value proposition that we bring to the market, but it needs to be adopted.
I'll take a couple. We've got some questions from the audience here. So the one that came up right away, everybody wants to know is what Zia mentioned around warranty, and maybe Brian could lead this. How do we get around the regulators aspect of this new type of warranty insurance? Or does it work like it used to before?
Well, I think in terms of how a regulator would react to something like that, you probably have to assume that the regulator's instincts are going to be the same as they were in the old analog world, in the world of paper contracts, right? What I think is potentially very interesting is what Zia is mentioning about you might open up these whole new markets for new insurance products and insure things that weren't insurable before. And you obviously need to be a little bit careful where you tread there, because you might start insuring things where you have, regulatory limitations on what you can do. Like I liked a lot of the ideas you suggested. Some of them starting to, insure family events and divorce and stuff. In terms of legal restrictions, not even looking at regulators, but more fundamental kind of common law contract rules. Contracts against public policy, they're called, there might actually be some limitations, right? So the fact that you've opened up something new and exciting, probably good to check with your lawyers where you should be insuring that or not.
Yeah, so some of those are just for fun, as certainly the divorce decree is. But let's think about cancer. Cancer is an issue where lethality goes way up if the stage of the cancer detection is delayed. And the reason we are not able to detect cancer more frequently is because cancer tests are invasive, they're expensive, and we're lazy human beings. We don't want to do it. But if we were able to find a way to test for cancer more frequently, then we could potentially take the survival rate of something like a breast cancer from something like 12% up to 99%. And the idea around if we were able to identify and put in place contracts around warranty, it might be able to say, look, you're not going to get stage 3 cancer in the next year if you take this test. You might get stage 1 or stage 2 because that's possible. That's how cancer works. But the chances of you getting stage 3, you're not going to get it. It's a warranty against a future health outcome, which is incredibly negative. And it may be all it would take to take one of these cancer tests, which is somewhat invasive, but if it were added, some of this added insurance warranty were added to it, along with, of course, both regulators, right? It's the insurance regulator and the health regulator have to be comfortable with it. The health outcome benefit is what I go front and center with. I'm not here to make money. I'm here to change health outcomes, which in effect will increase longevity, reduce claims, and make everybody happier. But it happens when we start to build smart contracts that allow people to say, look, if you do this, then if something really bad were to happen, we'll warranty against it. Does that make sense?
Do you guys want to add anything to that? That was a good topic. How about another question from the audience? Here's one. You guys are like. Now, the whole thing about blockchain is that it reduces the middleman or eliminates the middleman. How is this going to affect the insurance industry when you're reliant on, sales agents that are not part of the actual insurer? Like, will it enhance them, make them more efficient, or just you don't even need them anymore?
No, I think you can use these kinds of smart contracts on the back end with any of the distribution, right? An agent can share this with their customer, their policyholder at a moment of need. It could be done direct. It could be done digitally. I think we've separated Vitana into the Vitana front end and the back end, which is done using smart contracts. So I don't think it really has to affect the means for distribution, but it does make it a whole lot easier, I think, if you do make it simple.
David, you want?
Yeah, I was just going to say that across all industries, I think the talk track of blockchain is about disintermediation is roughly over. I think everyone, everyone's accepted that that as we ran, the exuberance of running in to say we're going to disintermediate everyone was industry by industry soundly beaten back by the value that intermediaries play. And at the end of the day, it boils down to the fact that we have a basic social construct in any context of there needs to be someone to fix it when it goes wrong. So in this construct of shared data access and and automated business logic, the only players that are run the risk of true disintermediation are those that aren't providing any value. Otherwise, it may dramatically change the nature of intermediaries, but it's very rare actually that they get eliminated because when you take a hard look at it, intermediaries are providing some degree of value, typically in the form of fixing it when it goes wrong. That language has, I think, certainly in financial services, that language has shifted over the past year. It's spreading industry by industry.
Okay. Now, let's say for smart contracts to hit the tipping point where, it hits that inflection point where it starts really being adopted. Is this going to require an industry-wide adoption or collaboration, or can a couple solo players like Metlife, LumenLab, or AXA say, hey, we executed something really well, everybody says, okay, now we can catch on board?
Yeah. My view is that hopefully we've shown that we can move reasonably quickly. The hard part through all this is the Oracle. How do we get the oracles out there, the data providers, tied into this process? And as much time as I spend on what else could we do, it always gets hit by, I'm not sure if I can find a data provider that's willing to help us with this. So,
can you give an example of that?
Well, we finally found a way to do this with life insurance, but it took a little while to find an oracle that's going to be reliable enough to be able to say, and we're willing to share this. Usually there's privacy concerns or other reasons why they don't say they want to contribute to the insurance sector. But anything that any one of you out there that's a data provider that's wondering, oh, I wonder if my data set could be useful in an insurance contract, think long and hard about how that ecosystem could derive value, because for us, it's the availability of data that the consumers can trust that's probably going to be the limiting factor for the next couple of years.
There's a particular sensitivity, I think, in the insurance industry and in fintech generally, where obviously getting together to build standards is very fraught with risk from an antitrust perspective. And there's consortia out there, and they're very, very well aware of this. But there's a particular risk in building a technology platform. You see more and more case law emerging around various types of automated technologies where you're discovering that there's algorithmic bias that nobody built in deliberately, right? It's not we sat around at the table and decided we're going to fix prices. But what if we launched this brilliant platform? Our intentions were pure, right? We wanted to drive efficiencies, we wanted better customer experience, but our prices start converging at a point that's not necessarily beneficial for the customer. Then no matter what our intentions were, we may well find ourselves in some trouble. And as I say, B3I, all those consortia, they're very acutely aware of this, but there's no easy solution to it.
Yeah, let me get a good example on pricing. It's getting a little technical. It's IVF. We've been trying to do IVF for a while. And the principle that I thought about was that one of the reasons why many people don't try IVF in a low fertility environment is because of the unbound cost. You don't know how many goes it's going to take. So let's assume that it's $10,000 saying every time that you try IVF. You might get it the first time, you might get it a second time, third, fourth, fifth. You just don't know. Well, what if you could get 4 goes for the price of 1.6? So if you got lucky the first time, then you're fine. You've paid 1.6 times. But for those who need the second, the third, the fourth, it would all work out. This would get rid of one of the major barriers, financial barriers towards IVF, and many governments have been very excited about this. The problem is in pricing. It just doesn't work that way. You'd have to price it at, you have to pay 3 times as much to get 4 goes, because the incidence, or the success rate for IVF is only 20%. So indeed, there are many examples where when you finally end up setting the price for an insurance product, it's no longer customer compelling, and then we have to move on to the next risk pool. But that's an interesting example, because I wish we could solve the IVF problem using a technology like this.
Interesting. Frank, how about you? What do you think will take to get to the tipping point of smart contract adoption by everybody?
Yeah, actually, the more we make progress on the technology by partnering with some startups and so on, the more we get access to some data, the more we are able to do real-time pricing, which give us a very interesting challenge, actually, that make the full industry a challenge by real-time pricing, because real-time pricing is mostly about accessing to your data and to give you the price which is really personalized for you according to your data. The problem is insurance is the mutualization of risk. So in which bucket of risk I will gather your risk, I will pool your risk to be able to insure it, right? So I think here we are going to be challenged by the fact that we are going to try to personalize the price, and at some point we will need to still mutualize the risk to make it happen. So smart contracts is helping us to actually also deal with the reinsurance companies, where we can provide pure block of risk and segment it differently for making this mutualization cheaper than the existing one, right?
Over yourself, David. What are the challenges? You see everything at a global basis.
Yeah, on a global basis, I get asked this all the time can I as an individual company, right? I'm sitting with a CEO. Is there something I can do just by myself with blockchain, and smart contracts and the like? And the purest technical answer is no. Right, this is about shared data access outside of the firewall or boundary of your organization. It's shared data access with some other party where there's trust is a weird word in the space, but it's multiple parties sharing access to data. You should be able to solve your problems within the firewalls of your organization better with traditional technology. Now, there are exceptions to that, where I'm sitting with a CEO and they basically say, "That's I get that, but I've never ever been able to get Business Division A to cooperate with Business Division B," and actually, we've had some valid internal use cases. But at the end of the day, this is about shared data access outside of the current legal constructs of data sharing, that's within the four walls of your organization.
Interesting. Let's take another question from the audience. If we can get the ones to come up. Let's see.
Maybe we can answer to the can human language contract be translated into code or with our lawyers?
This could be very abstract here. So let's do that. Can human language contracts be translated into code or code into legal contracts? We'll start with our friendly lawyer.
Yeah, I suppose
probably thinks about this all day.
Yeah, well, I'll keep it short though. I'm sure David and the others will have views on this as well. I suppose the bottom line is don't be too ambitious, right? If you're going to try and model all of human language into code, you're going to fail, right? Leibniz had a shot at this about 400 years ago, and we haven't done that much better since, right? I think the philosophical consensus is the human languages, which happen to be the languages we use to make contracts, are far too ambiguous. You can't formalize them. If you open up, Corda and you start coding a smart contract in it, what you're going to see is not some kind of mysterious magic language that, uses artificial intelligence to model ordinary speech. It looks a lot like Java, right? It's Kotlin, right? So anybody who knows a little bit of coding will be very familiar with what he's doing. It's just, modeling events in computer code. So what you're talking about is don't try to do something too complex. Take a use case that's sufficiently small, clear, that you can formalize it, and then you can encode it. Then you can create events that can be meaningfully automated. But if you're going to take a contract from the shelf and try and translate that into code, that's not really a meaningful exercise. There are some industries where very ambitious projects have been launched to do that, like ISDAs and derivatives, where that might be more manageable precisely because the domain is quite well defined.
Yeah, I think that's the core point, which is if you're building a contract that uses such sophisticated nuance and ambiguity in human language, ask yourself whether you really should be. And the average insurance contract is longer than the play Romeo and Juliet. Why? And so the question really is exactly what you're saying is, do we really need such complex contracts? And if you push yourself on that dimension, then you might say, no, we really don't. And so the logic might be only write contracts that are simple enough that can be coded. And if you're writing a contract that's so complicated that even DeepMind cannot code it, then maybe you're writing the wrong contract. I think that's a future way of thinking about it. But the idea of taking existing contracts and turning them into code is not necessary. It's about taking the things that we write in the future, making them simpler, and then therefore codable.
All right, so let's have one last question. Quick predictions from these guys. Which area of fintech do you guys think smart contracts will be basically the leaders in? Insurance, banking, capital markets? Let's start from the end with Zia.
I was going to cheat and say the part of distributed ledger technology that I think is going to have the greatest impact is provenance and not the smart contract feature. And it will help with regards to supply chain and things that really matter on the planet. As opposed to financial services. I say that at a fintech festival. But if it had to be something within FS, it's insurance.
Well, something's got to push. Something's going to lead the charge, right? And yeah, that's
so we think it's insurance within financial services. Okay. But provenance, I think, in the 5-year horizon is a bigger application of DLT that's going to do good.
Okay, Frank.
Yeah, I think regulators, government, states, and so on will push us financial institutions to use blockchain. From a regulator perspective, and notably to better protect the data of our customers, or to give back the data of our customers to our customers. And if you look at GDPR, blockchain, and smart contract, could be the way to execute it properly, actually. So I do believe we are going to be pushed by the regulators.
Yeah, from our data over the past several years of work that's happening, the capital markets and payments jumped out first, and fastest.
Yeah.
But I think are quickly being eclipsed by the insurance industry actually in terms of pace of innovation. So they're ahead, and the majority of of actual production lines of code and real implementations I think are in those areas. But I think insurance is now scaling faster.
Finally, Brian.
I find the insurance sector absolutely fascinating, and when I do my lawyer thing of sitting down and thinking all the reasons why you can't do something, I'm afraid I do think that insurance is tricky. There's a lot of angles, in particular the Oracle bit, that I think introduces some really big challenges, super interesting challenges, but not necessarily the easiest to solve. So I think derivatives, where you have a pretty self-contained universe and a lot of work going on already in the smart contracts area, would be my bet.
Okay. Well, for me, I learned a lot today. I used to think of the obvious insurance things like flight insurance, maybe some life insurance, basic car insurance. But knowing that what Zia said around, gestational diabetes, Frank said about crop insurance, specifically for emerging markets, that's like the super fascinating stuff that makes me interested in this space. So I want to give a last round of applause for this great panel that we have, covering a very number of sectors of this industry. Thanks, guys.